Best Countries for Investing Your Money by www.profitableinvestingtips.com. Invest offshore to diversify your portfolio and take advantage of global growth opportunities. But what are the best countries for investing your money? Forbes provides a list of countries and suggested investments in a recent article. The first nation on the list is Portugal. 1. Portugal. Buy Global X FTSE Portugal PGAL. Why? With its banking issues from the summer of 2014 largely contained and fiscal policy improving, Portugal will lead the pack in any Eurozone recovery scenario. In terms of fiscal policy, Portugal is mostly improving. The top corporate tax rate was reduced to 21% this year from 23%. Read the article for the details. Here is a list of the best countries for investing your money from 1 to 10. Portugal, Spain, Denmark, Ireland, Germany, Japan, China, USA, Hungary, India. Safe bets and improving conditions. The global economic downturn is slowly but surely getting better. There are a lot of stocks that suffered greatly after the 2008 market crash, and there are deals to be found. The best rationale is to invest in safe economies and look for undervalued stocks or index funds. South Korea and China are both at stock market highs, which means you probably want to look elsewhere. China is also considering taxing foreign investors, according to Reuters, which is another reason to look at the other 9 countries on the best countries for investing your money list. China is considering taxing foreign investors for their share trading profits going back to November, when Beijing announced an exemption of such duties after the launch of the Shanghai-Hong Kong Connect scheme, the stock regulator said on Friday. China's 2 largest portfolio investment schemes for foreigners, known as the Qualified Foreign Institutional Investor, KFII, and the renminbi-denominated version of the same program, RQFII, will likely be subject to a 10% corporate income tax until November 16, 2014, retrospectively. The Chinese Securities Regulatory Commission, CSRC, said on its official Weibo on Friday that such a move would be in line with China's income tax laws. Its comments confirm a Reuters report in February, citing sources that such a plan was being considered. If an investment pays well enough, it is just a business expense to pay taxes. But when other nations provide equal or better investment opportunities and lower taxes, it is a simple decision where to invest your money. Funds, stocks, or ADRs. If you are a fluent speaker of Portuguese and have an account with a broker in Portugal, direct investment in a local stock or local stock index fund may be a good approach. However, there are 10 nations on Forbes' best countries for investing your money list, and it is unlikely that you will be able to deal efficiency in each national language. Thus, U.S.-based funds that focus on specific countries are a decent approach, and so are ADRs, American Depository Receipts. Investopedia defines American Depository Receipt: a negotiable certificate issued by a U.S. bank representing a specific number of shares, or 1 share, in a foreign stock that is traded on a U.S. exchange. ADRs are denominated in U.S. dollars, with the underlying security held by a U.S. financial institution overseas. ADRs help to reduce administration and duty costs that would otherwise be levied on each transaction. ADRs are a good way to invest in foreign stocks. Level 1 ADRs trade on U.S. stock exchanges and are subject to the same disclosure requirements as U.S. stocks, making your research into stock fundamentals as safe and accurate as when buying U.S. stocks. If you want to diversify your portfolio with stocks from the best countries for investing your money, consider buying American Depository Receipts on the New York Stock Exchange or NASDAQ. For more insights and useful information about investments and investing, visit www.profitableinvestingtips.com.